Quick little break. We have our next speaker, Mr. Jason Andrew, the president from North America at FINEOS. A little bit of background before I pass along the platform to him. Uh, Mr. Jason is an entrepreneur and angel investor and seasoned executive working to solve big problems in insurance, insurtech, health, and wellness. Vision, a world where protection from illness, injury, and loss is accessible to everyone. Passionate about values driven culture where people can come to work and be their authentic self through humility, grit, dogwood, kaizen, onwit. Recognized health insurance and health reform expert with over 25 years of executive leadership, bridge builder who excels at bringing people together, named one of 30 innovators to watch in 2019 and Entrepreneur of the Year 2020. Nominee as well for the EY Northern California Entrepreneur of the Year for the year 2020. Founded Limelight Health in 2014, grew Limelight through 2014 to 2020, acquired by FINEOS in July 2020, and now a public company on the ASX FCL. Thank you so much, and Mr. Jason, for joining us today. You have the floor, and thank you for joining us today.
Absolutely. Thanks for having me. Really great to be here, and it's nice. Appreciate everybody taking the time. So let me share my screen here. Okay, can everyone see my screen?
Yes.
Okay, fantastic. So feel free. I'll go through the presentation and share a number of things here, and there's kind of several different topics I'll discuss and hit on and give a little bit of background about myself and our company, but also talk about a personal journey I took while climbing a mountain. So hopefully it'll be engaging, and feel free at any point, please, if you have questions or you want to engage in some conversation, just cut me off.
No worries, Jason. I'll be letting you know the questions as they come through. So pardon me if I interrupt you as you go along, because we have questions coming in as presentations go through. Thank you so much.
Yep, perfect. Sounds good. So as mentioned, I was previously CEO of Limelight Health. We started that in 2014. I've been in the insurance industry for a couple of decades and been in Silicon Valley that whole time. There were 4 of us that started Limelight, about 50 plus years experience between us. We had 3 offices, raised about 4 rounds of funding. In total, raised about $44 million, grew to about 130 employees, and then we were acquired 6 months ago by FINEOS. And so now I currently serve as president of North America for FINEOS, and going through the difference of being in a large public company versus having started 4 companies and been in smaller organizations. So it's been quite a journey. FINEOS is 100% focused on life, accident, and health. We've got 5 of the top 10 carriers in the US that have our absence product. We've got about 60 carriers globally. We don't have any customers in Italy, but I've visited Italy, love culture, the history of the country, and would love to go there more often. And we certainly have about 8 customers in Europe. We've got Aviva, CBG, Liberty, National Netherlands, Virgin Money, White House, and some others. But 7 of the top 10 US carriers in claims. Again, we got about 1,000 employees globally, and about half of those are in R&D. So we're investing quite a bit in innovation and in product. About $1 billion market cap after gone public in August of 20, and then FINEOS acquired Limelight just August a year later. Sorry, went public in 19 and just acquired Limelight. Again, we've got a global footprint. We've got customers in Australia, New Zealand, Europe. We're actively looking to grow in Europe and in Asia, and a good portion of our revenues are in the United States and North America. As mentioned, FINEOS went public, raised a couple $100 million, and then raised more last year. So just 1 year apart to acquire my company, Limelight. It's our CEO, Michael Kelly. Started FINEOS 27 years ago, so been in the market and in the industry for a very long time, and have grown the business quite substantially. And as mentioned, we've got a number of customers. I just went through some of those, so I won't spend a ton more time there.
Jason, so from that sort of very international approach to both your management and your clients and just a footprint, what do you think was the biggest challenge with this global model given the current situations, and how did you solve that? And what was like good? Was it bad? How the recent events affected your global footprint?
Yeah, so if I understand the question in terms of, is it mostly related to the transition to being virtual with COVID and kind of the shift in business operations?
Yes, yes, and
Yeah.
then now I would say it's not just to me it seems that there's a lot of sort of connections in the way that the business was done traditionally, given that very international footprint that have people in Australia, that have people here. There is really pretty much a giant branch in the middle of all of this well-oiled machine. So how did you react on it, and what were some biggest challenges that you saw?
Yeah, so I can speak from my perspective to that question, being that I'm 6 months new in terms of being with FINEOS and having a global footprint, and most of the leadership team has been here for 25 plus years. So I won't be able to speak to some of that historical growth as much. FINEOS started as is based in Dublin, Ireland, and most of the leadership team is there. And the founding team and Michael Kelly, our CEO, had previous experience prior to starting that, working in Asia and in Europe and in Australia, and had built out a footprint of core systems for a number of years. And so started with claims and had built a pretty large presence in APAC, building out the company with core operations in Ireland. Given that footprint, there has been over the years very specific focuses on different markets. So one of the reasons that FINEOS had looked at acquiring Limelight as an example was to have a larger presence in North America, to get a leadership team, myself and a lot of the rest of our leadership team, and then really accelerate growth. About 60% of revenues for our company come from North America. And so that was a way to have a stronger presence here. We're doing the same thing in Asia and in Europe right now, which is starting small with some partnerships and hiring folks that are local in those markets, and then looking to expand. I think the second thing is, Limelight has always been a remote company, so it wasn't much of a transition. And because of the global presence that FINEOS has had, we do have a number of offices, but many of the 1,000 employees had already been working remotely. So we spent a lot of time on intentionally figuring out ways that we could get engagement from employees and customers while being remote. So I'll pause with that. I'm not sure if that answers your question.
No,
and again, does that help some?
Yeah.
Awesome. Okay, so I'm going to weave in kind of parts of a presentation I call Mountains Business Life. And we'll talk about software, and I'm going to relate that to some things. And the reason for that is about 2.5 years ago, I climbed Mount Shasta. It's something I'd wanted to do for 20 years. If you've ever been to California and you drive north on I-5 from San Francisco, Mount Shasta is up towards the Oregon border. And when you pass by it, and I drove back and forth growing up my whole life, you see this beautiful mountain off the side of the road, and it calls to you. And it looks like it's easy to climb, and it's not known as a technical climb. It's not like an Everest or something that's like super technical. But every year, about 15,000 people make an attempt to summit, and about 5,000 actually get there. So you have 1/3 of 30% chance if you go to summit of actually summiting. And about 10,000 turn back in defeat. So again, it's considered a non-technical climb, and it does require a helmet and crampons and ice axe, and it's just above 14,000 feet. About 50 people have died attempting the summit, and every year about 12 to 20 people have to be rescued or airlifted off the mountain by search and rescue teams. And as I was doing my research, there's 3 main reasons that people either get hurt or killed. And one is falling rocks. The route that we went up is called Avalanche Gulch. And it's a route that goes up. The later in the season that you go, snow melts and there's rocks at the top called Red Rock Canyon, basically, the ridge. And as the snow melts, these rocks, come barreling down the mountain, and people get hit or maimed, and you have to dodge rocks while you're hanging on to your ice axe and crampons. Second reason is that people either go up too late or turn back not soon enough, and then in the evening time, the wind has its own weather system on the top of the mountain, so folks will get lost up there, get turned around, and freeze to death, or go down the back of the mountain and fall off or something. And then the last one is it's a lot of fun glissading or sliding down the mountain. And so many people are injured by losing control glissading down the mountain. So if I compare that to Silicon Valley, I've lived here for 20 years, and I talk to my kids all the time about the idea that they kind of live in a bubble. And what I mean by that is that if you live here, so many people have these wild success stories. Everyone knows somebody that's worked with an Uber or worked with a Google, and they make $1 gajillion, and it looks alluring. It's like the mountain at the side of the road. You see this, like, oh, anybody can do this, and but the stats are even smaller when you look at them. This chart says as of 2017, there were 1,027 companies who had raised a seed round back in 2008. So in a roughly a 10-year period. Well, only around after that, only around 90 or 9% are still around or ever raised a fourth round of funding. So it means that the majority of companies, the stats are 90% of companies that get venture are not going to make it. About 12% of those have some type of an exit. Most of those are a small, return. And the rest are 810 are what they call, they're just dead, or they're walking zombies, which means they're companies that kind of are still going, but they're never going to get a return for their investors. And the 1%, right? So 10 out of 1,000 companies will become Lemonade or Gusto or Assurance IQ, which Prudential bought, or Next Insurance, which just raised a big round, I think a 3 or 5 billion, valuation. But that's the rarity. About 89 have a successful exit or M&A between 50 million and over 1 billion. Limelight was fortunate to be in that category. We raised the 4 rounds and got a good return for our investors. But like summiting a mountain, it ain't easy. And it's treacherous along the way. And just like you can get, maimed by falling rocks or slide and fall to your death, building a mountain, building a company just takes a lot out. And so I think this also relates to innovating in an established insurance company, or looking for ways to innovate and really install something new in a larger established organization. And so, it's interesting, the top 10 challenges for CEOs and presidents, the top one, and I look at this maybe backwards, but 27%, said change management. And customer experience or distribution. And when I think of change management, if you think about trying to install new software, or bringing in an innovative, having someone who's the innovation officer and look at how we really disrupt, grow, or move our industry forward, I'd say change management, personal change in our business, is the most difficult and often the one that that inhibits innovation more than anything else. And it's super challenging to do because it requires, as I think about taking a company from 4 co-founders and growing it, I feel like every 6 months I had to become something completely different, or the ideas that I had, which maybe I love those ideas that weren't successful, I had to be willing to let them go. And so I think whether it's climbing a mountain, building a company, or whether it's installing transformation in our companies, it really requires substantial change and willingness to grow. So here's the trailhead right here. You can see on the top right, kind of that's the mountain. So when you leave here on the trailhead and you walk up, it's basically about 6 or 7 hours to get to base camp. And And this right here looks pretty close, but that's like 2 hours just to get up there or whatnot. And so you take off in the morning time. I think we left at like 7 and got up to base camp, which sits at about 10,000 feet. And then you stay the night to acclimate and get ready. So on the right-hand side, this is the view here. We were on the snow, and there ended up being about 40 tents that day when you get there. And so we, sat at base camp and had some food, and it was a lot of fun. Our tents here, you can see the route up Avalanche Gulch. This is about a 5-hour journey just to go up here. And then you start going all the way up to the top to get to the summit. And this is just 5 hours of kind of miserable, tedious, boring, painful hike up. So, how does that relate to our industry? I would say that the benefits industry, which is what I've worked in for 20 plus years, and what we're talking about and what we do at FINEOS, it's still operating in many ways as it did 30 years ago. And we've got proposals are in Excel, quotes are often sent and received via attachments. We've got lots of legacy systems that don't communicate with each other, multiple internal, external, systems that have to connect. And the result ends up being billions in lost revenue, avoidable mistakes, high overhead, difficult in maintaining systems that are outdated. And what I would say and suggest, if you're familiar, Noverica is a US-based analyst firm, and these are their core systems maps for systems that power carriers. And they rated these by ones that CIOs surveyed said that were of high importance to replace, to modernize, or to upgrade. So policy admin, underwriting workbench, agent and customer portals for distribution, were of the highest priority. And then mid-priority were claims, billing, workflow and doc management, and then business intelligence. And then the lowest, being general ledger, reinsurance management, and other components. So these are the areas that FINEOS focuses on. We have a full core suite doing claims, policy admin, billing. We do underwriting, rating, and quoting, which was due to the acquisition of Limelight, and focus on absence in the States. And then we're doing a lot of work around AI, machine learning, and some innovation areas. But what I would say for our industry generally is that we're effectively at base camp. And what I mean by that is the employee benefits industry is now there's a lot of money pouring in, and we're finally starting to get core system replacement. Because the really cool stuff that we're trying to do and get to, which I would say would be the summit, is innovation, ecosystem, where there's connectivity or interoperability. We've got machine learning and AI and data that's meaningful for underwriting and claims, and I'll talk about that in a little bit. But without the infrastructure, so if I look at companies that are working in our space, we spend so much time just trying to do custom stuff that you cannot focus on the really exciting things around customer experience, how we use data, and so forth. And so the benefits industry is kind of a laggard behind finance and P&C, but it's pretty exciting time from my perspective. So I would place the industry at base camp if I was talking about innovation. And so from there, then you kind of chart off and work towards getting to the summit. So basically, when we left base camp about 3:30 a.m., you wake up, so you can see those pictures on the right-hand side. It's pitch black and dark. And so we woke up, and you can kind of see there a little bit on the right up here. These are lights of people that had gone before us. So kind of heading up the mountain in the dark, you see the headlamps and so forth. And so we woke up, started going. A few hours later, about 3 hours, this is where you get to, it's called Misery Hill. So that's about like right here, maybe. And it's a pretty steep. So this is my friend Neil. He has his ice axe here, because if so when you rest, you just you've got your boots that are in, and you've got your ice axe in there, because if you don't, you just slide down the mountain and you get maimed or killed. So while we were here, I was kind of wondering at this point, like, why am I doing this? First of all, it's kind of miserable. I'd always wanted to climb it. It's clearly beautiful, but it was just, I was already kind of feeling sick, which in retrospect, maybe I should have turned back. It was a head game, because I kept thinking like, well, do I have, altitude sickness? Should I turn back? Well, is it just that I'm, have a headache? So going through all these things, and I wanted, I just felt like turning back already. It was, so while we were here in this space, people would start yelling to get out of the way, because the first thing that I mentioned at the beginning of this presentation, there were rocks flying down the mountain that we had to dodge and get out of the way of. And just about 1 hour later, beautiful view of the shadow of the mountain here. But right in front of me, about 50 yards ahead, people were yelling to move out of the way. And one of the guys in a party of 3 got hit by one of those rocks, and it shattered his leg. And so, this is first part of the morning, we're climbing up, and I remember I had read, like, here's all the things that happened on the mountain. And, a few hours into the climb, going to the summit, there's this guy whose leg was shattered, and his 2 friends had to kind of tie up his leg and then start taking him down. So we're going up, everybody going up has to go by, seeing this guy writhing in agony. And so that was a little bit disconcerting. About an hour after that, we see a helicopter come in, and they had to airlift him off because he couldn't, walk, and they had to take him down. So this is just below 14,000 feet. And I have a video, but we had to stop multiple times and take breaks. There were a lot of times where I wanted to turn back. And we got to about 13,900 feet, and it was this plateau area. And I thought that we were at the summit. And so I didn't think I was going to make it to the top. So it's a little embarrassing, but I started to cry, because I was just like, wow, I made it. I didn't think I was going to make it. And then as I'm sitting there feeling like victorious, I see these people walking past me. And I was like, I turn around, and I wasn't at the summit. It was like 2 hours further up there. And so I got up, and I was just like, I was so mad. I was like, I've cried for nothing. It's a false summit. So anyway, so we took another break, and gathered myself together, and we then went, the next 2 hours, and we actually, got there as my friend Neil, got to the summit. We made it, so 14,180 feet, and we were pretty stoked to get there and make it all the way to the top. So when I think about our industry and our business, I think there's several areas that are pretty exciting when I think about it in terms of where there's real growth opportunities. So I think one is in building out ecosystems and allowing there to be true API connectivity that allows us to really make some meaningful difference in both product design, how we distribute products, as well, how we utilize data. So if we look at this is just one example of, we just partnered with Usher, which is a company here in the Valley that's raised about $30 million. And their focus is on claims adjudication and using chatbots to communicate to customers, and then use that data to be able to reduce the time it takes to both communicate about and get claims out. And they also are doing RFP, request for proposal intake, and automating that. We chose to focus, number one, on RFP intake, which most carriers today are, during the busy season in the States, hiring 100, 200, 300 people to manually scrub all the incoming emails, look at what's missing on the census, get it back to the broker, and just days and days of lost productivity, slow turnaround times, high cost of acquisition because of just manual processes. And so via the APIs with Usher, with Salesforce, what we're doing is reducing that to near real time, where we can normalize that data when it comes in, automatically generate a response back to the broker in real time that says, here's the 5 missing pieces. And then if you can input them into this form, it'll go back into Salesforce or into a system. So that's one example. Then once that's in the system, you think about a sales executive or an underwriting team that then needs to take a look at that manually. And then often for some groups are sending out to third parties, whether it's a Milliman or someone else for a risk score. So now on our dashboard, we've got the ability to just then ping a third-party data set for a real-time third-party risk score and beginning to integrate data. And then one of the other areas where there's a lot of drop-offs are when you come to then enrollment, and how do we then make the setup for the group or for the individuals. How do we work on getting them into the system and then managing that? And so again, if we can build out mature ecosystems because we have modern systems that are scalable, SaaS-based, and in the cloud, what we're seeing is you'll build out more mature ecosystems and allow for, again, better profitability, better pricing and creation of products, and better management of customers and owning them. Some other areas of ecosystems we think about, I just mentioned Usher and then risk scoring, whether it's TransUnion, RGA, Deloitte's got their Predict Risk. And then enrollment systems, there's a whole bunch of those that are growing, that typically and historically have been siloed and off to their selves in that sense, but we can pull them in via API. What FINEOS has done is we've built out an ecosystem. If we look at our competitors as well, Majesco, Vitek, and EIS, we've integrated there because what we believe is it may be that a customer wants one solution for policy admin, billing, claims, underwriting, and rating, and we certainly can do that. And we're purpose built for benefits, so it's all that we do. But we also see a world where it's going to be likely that someone says, we want to utilize one system for policy administration, another system for billing, and at maturity, if we've got those integrations via API, then we see we can pull those together and configure them in a way that allows you as an insurer to build your own experience, no different than what Apple has done with the iPhone, which is here's the platform to build upon, and now you can create your own experience via an app that meets the needs of your business and focus on that. So some of the AI capabilities and things that we're seeing, again, using natural language processing and machine learning that determines intent and of unstructured text or pictures, beginning to extract and populate missing data, whether that's claims data, whether it's a policy data, whether that's for underwriting and rating. We're also starting to have some efforts underway to look at message sentiment analysis. We do a lot around disability, and so looking at can we begin to predict how long someone might be out on a disability, or what a claimant may be based on a number of set of data that we have based on all the claims going through our system. And so these are many of these on the early stages. We're also looking at plan designs and target populations to figure out what products based on a number of factors would sell best to which individuals at what stage of their journey in life. And so a lot of the capabilities that we can use around artificial intelligence, machine learning, we think this is going to really mature in the coming years and bring about lots of fun stuff. So I would call that getting to the summit, which is where we really begin to find ways to actually improve health, and whether that's physical health, mental health, and actually make a meaningful impact on people's lives and make our products and companies more profitable along the way. So even if you have summited, then often what it said is that the journey down can be the most dangerous. So the steepest part of the descent is coming back through Red Banks, which you can see up there, and it's about an hour and a half from the summit, coming down. So I was with two of my friends, Chris and Neil. Neil and I had done a number of hikes together. It was our first time, and Chris, it was his first time on a mountain. So the little experience I had attempted Shasta the year before, and I had climbed Mount St. Helens, which is a volcano. It's a little bit smaller, even about 9,000 feet, and I didn't have a ton of experience. I'd done a lot of research and talked to friends. So before we got to Red Banks, we were sliding and glissading, and I was teaching Chris and Neil how to do that some. And we got to a very steep part of Red Banks, which is, it comes through these really narrow section. You can't see it. It goes off the left here. But this is a distance, of 2 or 3 football fields, and you can see how steep it is. Well, you're supposed to walk down like this guy here. This is not a section that you want to glissade down. And so we were at the very top of it, and Chris said, "Hey, let's glissade here." And I said, "I don't think we should." We kind of went back and forth, and then I said, "Okay, yeah, let's do it." That was my first mistake. Second mistake was, and I don't even know why, but when you place your ice axe, you place it, kind of right here, like right below your shoulders. For some reason, I swung the ice axe before we took off our crampons, and I swung the ice axe over the left shoulder, and it caught onto Neil's boot, so it didn't catch into the snow, and I started sliding. In that moment, I thought of the 3 ways that people die or get hurt on the mountain, and one of them was losing control while they slide. And here I was, lost control of the steepest part of the mountain. And I just thought, I can't believe I just did that. It's unbelievable. And I'm going to die on this mountain. So I'm sliding down out of control. Now, Chris, because he'd never been on a mountain before, made an equally dumb decision, but ended up saving my life. He decided, I thought that my ice axe hitting his boot, it was Chris's, not Neil's, hitting his boot kind of pulled him along after me. But he actually said that he made the decision to try and come after me, which was a really bad decision. So no joke, people say that when you're in these life and death situations, time slows down, but I'm going down the mountain, and I all of a sudden somehow see to my left, Chris is there, and the 2 ice axes are like floating. And so I'm picking up speed, and I yelled out, "Chris, you need to self-arrest." And so I somehow grabbed one of the ice axes, and I shoved it into the snow. And it happened to be the one that was still had a brace on Chris's wrist. So he disappears because it worked. He slowed down. I kept going. So as you're coming down through this section here, there's all these rock. It's like a jagged volcanic rock. So next thing I know, I just hear things ripping to shreds. And I see rock flying past my face. I did have a helmet on. At one point towards the end of that, my helmet, hit the rock pretty hard. So I'm glad that I had the helmet on. And probably 15 seconds later, which is down in this section here, somehow I had flown over those rocks, and I came to a stop only because there were 3 seasoned hikers who were there, and apparently they risked their life. I was going slow enough in that section beyond the rock where one of the guys had a strong hold and grabbed onto me. And so I was sitting there, and I was in shock. And I thought that I had smashed my face, and I didn't know, what the injury was, but basically I had a pretty large gash down my entire left side, was bleeding pretty bad, and some damage to my back. And the three people standing there just said, "Hey, you're going to have to see if you can move because we can't take you down the mountain unless you're severely injured. You're going to have to self-rescue." And I had heard Chris was stopped on these rocks up here, but people said he couldn't move. So I was really concerned that he was severely injured or something. There happened to be three women, two of which were nurses there, interestingly enough. And Chris had some injuries to his back and couldn't walk. So my friend Neil, and these nurses kind of put him, wrapped him up, and they had to slide him down and went. So I saw him going past me. So the next 4 hours, I was kind of, I was able to get up and walk, but I was pretty injured, and I was terrified because now we're going down an extremely steep part of the mountain, and I was alone because they said, "Look, you're going to have to self-rescue because you can walk." Later, about an hour later, I saw another helicopter come in the very bottom. It was not for Chris. So Chris was pretty injured, but he was able to finally walk. But there was a second person who was down there that had to be airlifted off. And so I got to base camp, we rested some, and bruised and bloodied, but not dead or without any broken bones. Miraculously, we were able to walk off the mountain and get out with not having horrible injuries. My left side still hurts to this day. I don't know what it is, but on my thigh. But even when you've made it to the summit, sometimes coming down can be the thing. It was a humbling experience because I feel like I had done a lot of research on being safe and going through there, but still ended up having a pretty scary accident in coming off the mountain. So that's my story. I'm happy to answer any questions and talk through anything, and appreciate everybody taking the time.
So what would you say was the I guess the good question. Did you have insurance that actually covered that?
I did. Yes, I was grateful to have insurance, so that obviously was a benefit for sure.
Definitely. So in terms of this maybe merger, right? That they said going from one company to another. So what would you say was the things that were United States specific, and what were things were kind of globally? So what would you identify as those?
Well, it's a great question. There were two things that were really appealing about the acquisition by FINEOS specifically. So Limelight had a lot of inbound interest outside of the United States, but being a newer company, a smaller company, even though we had raised $40 million, we had some resource constraints. So we had to do internationalization, localization if we were going to look at other markets, and that was just not something that we had as an imminent thing. Even though we had inbound interest, we were focused on the U.S. market, and we did want to go international. We believed that eventually we would go, and Limelight had only underwriting and rating of the 5 core systems. We didn't have policy, admin, billing, or claims. FINEOS, on the other hand, was a global company that had policy, admin, billing, and claims, but not underwriting and rating. So it was a perfect match from that perspective. FINEOS wanted to have a stronger presence in North America and the US, and we provided that. And then lastly, it gave Limelight the ability to accelerate some of our ability to focus in markets other than the US. So I think it was a great marriage for all those reasons, giving both some strengths where there were areas that we wanted to focus on. Does that answer your question?
Yeah, I think so. So in terms of traction and what you said about raising the capital. So what was in your opinion the most deterministic metric that the investors were looking for to sort of say that yes, your model is working and your pitch is in fact sort of hitting the home run?
Yeah, I mean, I think it depends on the stage. So at each stage, those metrics were different. At the seed stage, Series A, and I think that's really what the investors were looking for, was that we were getting meaningful traction at each stage. And so I think for those that are raising venture capital or those that are investing, if you're a corporate VC and you're looking at investing, what we've seen is, at a seed stage, someone's looking to see that you've got, a team that has the experience, you've got a prototype or something that has some promise, you've got a few beta customers and maybe some revenue, all of which we did. We had about 80 customers, and we had a prototype. And so, folks felt comfortable enough to do that. At the Series A, I think they were looking for, did we commercialize the product and did we grow revenue? And we did that, right? So I think it just, and then as we got into the later stage of funding, clearly it was, okay, can we now scale this, and is it repeatable in terms of, what we're looking for, and do we need to raise more to build? In this case, we would have had to have raised a lot more money to build or buy policy admin, versus we had inbound interest from folks that said, we have these things and together we can maximize the next phase of the business. So we looked at every stage at markers to say, if we can hit, we got 18 months, we need to hit these stages, and if we can do that, then we know we're going to attract the next level, and our current investors will be supportive of bringing in more capital on the dilution and stuff.
So on that note, when you were sort of going and raising against your customer traction, so what in your experience was the most appealing offer for your customers? What was something that would get them over the line to actually become your customers? What was that one thing that they were craving the most?
Yeah, for Limelight. When we were growing. Yeah. Well, I mean, there were several things. First of all, Limelight, some of the things I talked about in the presentation, was built on, API first and in the cloud. Now, interestingly enough, in 2015-16, when we were getting that to production, a lot of carriers were still leery of being in the cloud for security reasons. A lot of systems were on premise. So there was a lot of kind of concern, like, I'm not sure that we want to even do this. But we were a modern tech stack that was highly configurable in the cloud, and it was API first. And so our pitch was, you can build an ecosystem and build your type of features around our core system, which are going to be meaningful for your business, and we can integrate. We're not going to compete with other systems that you might have, and we're building, and we had connected to a lot of the enrollment systems. We had connected to some of the risk score providers. We had connected to some of the policy admin systems that didn't have underwriting and rating, or where we had a stronger underwriting and rating system. So I think, having a modern UI, UX, having APIs, being cloud first, and having built an ecosystem were some of the key things that were differentiators for us.
So it sounds like that you almost gave the freedom to create to your customers. So what was the thing that they was the most interested in creating, right? Was it the risk model? Was it something else? Or how exactly did you manage that part?
Yeah, the risk models were not the most, because they were, and I would argue still are, in their earlier phases. I think a lot of actuaries and underwriters are still trying to test out which data models are credible and which ones are going to have a meaningful ROI. And so it's pretty early stage. But I think the user experience, as well as integrations where there's drop-off points in the US and North America around enrollment, most enrollments are still done via paper. And so we had connected to some of the top enrollment systems to make that a substantially easier system. And it seems kind of basic, but we had spent a lot of time on just the user interface and our proposal outputs and the ability to configure and customize that in an industry where most technology and proposals are ugly. And that's not just us saying that, it's just having been in the industry for a long time. So I think if carriers make it easy for brokers and distributors to work with them, and they provide them quick turnarounds and a good user experience, they're going to want to come back and use them more. And that's some of what we provided.
So have you seen any kind of data that could be collected as a part of this process that would simplify the sales, or maybe underwriting, or pretty much any additional services that could be done by collecting the data throughout this process?
Yeah, 100%. Again, I get most excited about all the data sets that are out there that are being used. So if I think about some of the third-party data providers that we're working with, TransUnion, for example, and RGA, they're one of the top reinsurers, have done a lot of work around the idea that traditional life insurance, doing the blood and urine and taking a 10-page application and taking several weeks, that by simply pinging someone's credit score, that a credit score is as credible as doing all of those tests and that application in terms of life insurance rates and underwriting. And so you could now get authorization, have an online portal that allows for just pinging in real time a credit score, and you could do real time rating and approval for life insurance products. We're starting to see a lot of the information as we're in the early stages with others. There's Human API has data sets into health records and other information that you can begin to use for pricing different product lines. So we've got one other data set we're working with that overlays things that you wouldn't think of, but looking at social media and other metrics. So you can tell just by having someone's name and zip code if they're married or divorced, if they listen to Metallica, there might be more, which I like, but might be more predisposed to depression. Who knew that would be a thing? And so you can find out just by, probably 300 different social markers who's a good or bad risk for certain products based on their behavior, their lifestyle, and other things. So there are all kinds of companies that are working on this, and then we've got lots of APIs that connect into a underwriting dashboard that allow for better able to parse these depending on products.
So all of this kind of makes sense, right? And then how the general integration we can see amongst various channels and how everything is being integrated. But have you encountered something that you would never think would actually be the case? So maybe some kind of the data that you were surprised to see, or maybe some kind of the things that you didn't expect to onboard. So maybe something that completely surprised you of how your tool was used.
I'd say, and it might be a boring answer, but I'd say we're in the phase now of discovery to figure that out. Some of the one of the more recent initiatives that we've done is looked at a block of business to determine can we predict and reduce the number of quotes that are needed to provide or predict even before someone comes in for a quote request, which products may be best based on a number of factors for a specific group and what that would look like. So I think that's probably a fairly generic answer, but I think right now a lot of the tests are being done on different data sets that will reveal which things are surprising. Again, I think that the credit score was a very interesting one because who would have thought that there's some correlation between that and doing a blood and urine exam and a long questionnaire, right?
Yeah. So what do you think is sort of differentiates the successful insurance of the future? Do you think it's risk mitigation? Do you think it's right risk profile? Do you think it's risk prevention? Well, what do you see as the major trend to sort of differentiate those who will benefit from the changes versus those who's going to suffer from it?
Well, I think the first thing, and I say this to lots of insurers, and we've talked with folks over the years, I think that the key first thing is insurers that buy software, buy companies that's what they do versus building their own are going to far be more successful than carriers that are building their own stuff. Because it's not the business of an insurer. I mean, insurers are for risk prevention, right? And mitigating risk and then being able to provide a service. And all too often, what we've seen is that there are some carriers that still have very large IT teams. And sometimes, not always, but sometimes those IT teams simply want to make sure that they've got folks employed or they want to build things. But the moment that you build something that's legacy, it's going to be costly to maintain versus finding vendors who, if we think about a bunch of the companies that I mentioned in there, Usher just raised $30 million just to do one thing, which is how do we improve intake and natural language processing, and they'll raise a lot more money to do that. If we think about somebody like Gusto, like all they're doing is payroll, right? And so in terms of distribution, so it's really difficult if you look at a map of all of the different systems that are being attacked. If you're an insurance company and look at all the money that's being poured into innovation. So there might be at any given day 100 companies that are going to work on one piece of the puzzle around core software. So to try and compete against that isn't the best use of resources, in my opinion, rather than finding the best software companies that are really focused in their space and then building your own experience around those. Again, going back to the Apple iTunes store or iPhone example. So I think that's one. And then I think certainly figuring out ways, which everybody talks about through that, to really understand the customer journey. And then at what points do we do a great job as an insurance carrier providing the right products to the right people at the right time, at the right price, right? And I think those are probably the two key pieces from my perspective.
So and if you were more on the broker side, right? When you're working directly with the clients and maybe you do not have IT department or big checks to write for the SaaS, what do you think is the differentiator between the brokers who actually want to build more business, want to innovate? Where would they start, in your opinion?
Yeah, it's a great question. And I think you're right. I think it's the same thing with brokers in some ways. I think there was a study that has said, I've quoted a number of times, I forget who did the study, but that 40% of all the costs, or 40 of the I'm botching it now and I just forgot. Maybe it's because of my hitting my head in the mountain or something. Anyway, so we have so many, I'll think of it, I'll come to it, but we have so many manual processes that are done that we end up, whether it's a broker or a carrier, spending a lot of time and money on those manual processes rather than finding ways to automate it. So I think that as we're seeing consolidation in the broker space, the more that they're able to also focus on the more strategic value, which is what are the best products for my customer? How do I provide them the easiest way to select those products, enroll in those products, and then manage those, and reducing the friction, which is what ends up happening for a lot of brokers and distribution is I spend a ton of time on creating a proposal, manual static proposal. I spend a ton of time on trying to gather everybody's applications to enroll them. And so you might spend 40, 50% of your time on manual low-level tasks versus finding ways to automate those, create a good user experience. And again, there's some really cool companies, whether like if you think about Zapier, which just got like a $5 billion valuation, they hardly raised any money, did some pretty cool stuff. They're connected like 300 systems. So you think about the ability to connect your CRM with an enrollment system. You could use Zapier in the back end or a MuleSoft that does some similar stuff on a commercially gradable standpoint. So I think it takes brokers also to work at being innovative or getting some staff that can do some of the technical things, which would free them up to focus on more of the customer acquisition and the strategic areas.
But maybe one of the problems that people face, right, is that there is so many solution providers, so many companies that actually do different things here and there. So how would you say that one can start thinking about those new technologies, and where maybe one can start selecting some of those technologies, right? Because as you said, there is so many small things, and there's so many companies focusing on that one little thing. So how can, out of the myriad of the possible options, how I can select the one that is sort of needed for me, and how can I sort of educate myself about what are those opportunities are? Because unless I'm a venture capitalist in the space, I probably don't see them on a day-to-day basis.
Yeah. Well, I think there's some great places. I mean, you guys are one outlet that folks can connect with. Plug and Play Technologies is another one. Plug and Play's got cohorts of insurance companies that come through, and most of those are listed. So I think there's a number of InsurTech Connect is conference where folks can do a lot of kind of deal flow and biz dev. So I think those are some of the areas, which is kind of going where these congregate, and the ones that are the most meaningful typically are going to float to the top, and folks will see them, hear about them, learn about them, or see them over and over. As we kind of went on the conference circuit for a few years, you start seeing the same people, the same companies that are really getting some traction, or you start to hear the use cases of those. So I think there's a number of resources to kind of filter out the noise by going to some of those places, and then pulling together and seeing where those are. And then if you're a carrier and you've got some of your top brokers, maybe having a user group or something that says, hey, let me get my top 10 brokers in distribution and see what are they doing, that's really meaningful. And then I think in Des Moines, Iowa, there was a new fund that just started with like 10 of the top brokerage firms in the US. I forget the name of it right now, but they basically are investing in startups. Maybe you know who that is. So you can kind of boil down all the noise to 4 or 5 organizations or a user group of your top distributors or top peer carriers, and say, okay, what are you using, what are you seeing, and what's really getting some traction, and that can at least narrow it down some.
Yeah. All right, Jason. Thank you so much for sharing your story, for sharing your perspective from being, in this industry, innovative, insurance innovative space for a long time, and also climbing the mountains. So that apparently has some parallels in the same process. So, Jason, thank you so much, and have a wonderful rest of your day.
Absolutely. Thank you. Thanks for taking the time.